Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden language of corporate finance. Today, TD Synnex is dropping some serious cash, but where is it all going? TD Synnex, a big player in tech distribution and services, has just filed a Form 8K. This is essentially a report for big events that happen outside of their regular quarterly or annual filings. Think of it as a news alert for investors. The Securities and Exchange Commission, or SEC, requires companies to be super transparent, and these 8K forms are a crucial part of that. They announce significant corporate events that investors need to know about right away. The key date here is the 10th of October 2025. This is when the main event this report is about actually happened. TD Synnex, or TD Synnex Corporation as they're formerly known, is the company we're looking at today. They are incorporated in Delaware, which is a common state for large companies to set up shop, and this filing tells us a bit about their financial maneuvering. Now, let's talk about what they're doing. This filing is all about a massive debt issuance. They've sold 2 new sets of bonds, essentially borrowing a lot of money. First up, they V-issued 4.300% senior notes due in 2029. That means they V-borrowed $550 million that they promised to pay back by January of 2029. With this interest rate, 4.300%, is what they LL pay out to the bondholders each year. Then they V-got another 5.300% senior notes due in 2035. This is a larger chunk, $600 million, with a slightly higher interest rate of 5.300%, and they'll be paying this back in October of 2035. This whole deal, the notes offering as they call it, is a pretty big agreement. It means TD Synnex has entered into a significant financial contract. So, how much did they rake in from selling these bonds? After all the fees and expenses, they got about $1.14 billion. That is a huge amount of cash. Now for the big question, what are they going to do with all that money? A big chunk of it, over $581 million, is going to pay off an existing loan. This is like refinancing a mortgage to get a better interest rate or to pay down debt faster. They're also using some of this new cash to pay off another set of their own bonds that are due in 2026. It looks like they're retrying to manage their debt by replacing older, possibly higher interest debt with this new funding. And then there is the rest for general corporate purposes. This is a broad category that could mean anything from investing in new technologies, expanding their business, acquisitions, or simply having extra cash on hand for operations. It is always interesting to see how much is left for these flexible users. These detailed agreements, called indentures, are the legal documents that lay out all the terms and conditions for these new bonds. They include things like what happens if the company can't pay, or restrictions on how the company can operate, like limits on borrowing more money or selling off major assets. It is heavy reading, but it is where all the serious details are. This section just confirms that issuing these bonds creates a direct financial obligation for TD Synnex. They've taken on new debt, and it is now a formal part of their financial picture. Like many filings, this one includes forward-looking statements. This is basically the company saying, here is what we hope to do, but remember, things could change. They're legally required to put this in to protect themselves if future results don't match these predictions. They're saying that while they plan to use the money for these specific things, unexpected events could alter those plans. This exhibit is the actual document for the 6th supplemental indenture related to the 2029 notes. It is a deep dive into the nitty-gritty of that specific debt offering. And this one is the form of the 5.300% senior notes due 2035. It's like the official certificate showing the terms of those particular bonds. Finally, the report is signed off by David Jordan, who holds a pretty important role as Executive Vice President and Chief Financial Officer. This shows the top financial leadership is signing off on this major debt move. So what does this all mean for TD Synnex? On one hand, they're proactively managing their debt by refinancing some loans and potentially lowering their overall interest expenses. Raising over $1 billion and using it to pay down existing debt shows financial discipline. They're cleaning up their balance sheet. However, taking on new debt, even for refinancing, still increases their financial leverage. It means they have more obligations to meet in the future. The general corporate purposes part is a bit of a black box. While it allows them flexibility, investors always like to see clear plans for where large sums of money are going. We'll be keeping an eye on how they deploy that remaining cash. For now, it looks like a strategic move to strengthen their financial footing, but the continued growth and success will depend on how they invest that remaining capital and how the broader tech market performs. Alright, that is our breakdown of TD Synnex's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.